and this is almost like a little secret, but they operate more like an insurance policy. What's going on, everybody? Today we're going to be chatting about prop firms, the good, the bad, the ugly. I'm going to expose the truth of prop firms and how they're actually run. Okay, so in terms of prop firms, we're always sold this idea of prop firms are a place where we trade for a big company and we trade their capital. We make money based on what we make obviously every month with our trading, and then they pay us a percentage every month. Now, is this really true? Are we really trading a live account when we get a funded account? Okay, in most cases, unfortunately, this isn't true, and I'm going to go into that a bit deeper in the later part of this video. Now, when it comes to most of the big boys in the Forex prop trading industry, you know, the FTMOs, my Forex funds, the funded trader, we have to look at what happens with these accounts. Now, in most of these cases, you are trading for a company that accepts a fee to take their evaluation, okay, when it comes to prop firms. We then do the evaluation, make it past phase 1, phase 2, however many phases there are, usually there are 2. And once we make it to the funded part of the evaluation where you get the live account, in most cases this is a demo account, it's not live funds, okay. Firstly, the funded account cannot be live because it will create an issue for that prop firm where they will be risking way too much. Firstly, because you could blow the entire amount, not just the 10% drawdown that they allow on that account. And secondly, obviously, it will cause, you know, way too much risk in general for that prop firm, because they will literally have to be moving around thousands of dollars between accounts. Okay, now how they genuinely do operate, and this is almost like a little secret, but they operate more like an insurance policy. Now, what do I mean by this? This means that you pay your fee for your insurance along with hundreds of other people, and the insurance company has data and statistics to back the amount of claims they're going to need to pay these people that are paying their fees. So there is an extremely small percentage of people that are going to claim for whatever insurance they are claiming for. So for example, if you are claiming for your household insurance and you are insuring against theft, they know the statistics of theft in your neighborhood and the other thousands of people that are claiming or insuring their property in that neighborhood. They know that the likelihood of you claiming is, for example, 2%. Okay, they then give you a fee based on this likelihood, as well as obviously where you live, how much security you have, etc., etc. And they then create a premium for you that is based on these statistics, and it allows them to always make money overall. Now, your prop firms are exactly the same. They give you the rules, which are the conditions similar to the conditions, for example, your household insurance would be for exactly what security you have, as well as what neighborhood you live in, and the likelihood of you being obviously robbed is similar to the likelihood of the prop firm having to pay you in the event of you passing and withdrawing from them. So in essence, unfortunately, it's true that these prop firms do make money, okay, when you lose or do not pass the evaluation. And they do actually lose money when you make it to the last phase and then withdraw. They have to pay it from their profits. So this is similar to an insurance company that has to pay out on an insurance claim, and that's why some people have issues with insurance companies when it comes to them paying out. Okay, obviously with the prop firm space, if you are with a reputable prop firm, you won't have an issue with payouts as long as you follow their rules. Now, the rules, like I say, are similar to the conditions of insurance. They are working out the statistical chance of you passing the evaluation and making it to the withdrawal phase where it applies to the rules that they've given you. Okay, the rules determine the likelihood of this. Okay, so that's why you will see with different prop firms, some have easier rules, but their fees are higher. Now, this is the same as, for example, living in a more risky neighborhood for being robbed. You'll notice your premium will be higher on your insurance policy. This is the same with a prop firm. Now, I'm not saying that this is a good or a bad thing for us as traders. So is this bad news for us as traders? Now, I will say no, as I have been trading prop firms for the greater part of 3 years. I have been trading specifically with certain prop firms for over a year and have been withdrawing from these accounts for many, many months, okay? And as long as you have an edge in the market, your psychology is right, and you know exactly what you're doing, you will be fine, and you will be part of that 1% that makes money. Now, again, in order for me to make money, there must be people that are not making money, and that's unfortunately the reality of prop firm trading or trading in general. So in order for traders to be able to be paid out from these prop firms, there must be people that are paying fees. That's what allows these companies to be profitable long term and continue to pay out traders like us who are profitable. So I'm going to hop into my Forex Funds' website where you can actually see the statistics for February, and you'll be able to see that there really is close to almost 1% of people that are able to withdraw, and this is how they're able to make money. We're also going to, after that, go over the fact that there are actually prop firms that operate in an A-book manner that make money when you as a trader make money, and why it might be beneficial for you to work with a company like this rather than working with the traditional prop firm, which is again run in a B-book manner, which means that you lose money and they make money. Okay, so let's have a look at my Forex funds. My Forex funds released statistics for February. February, 8.7% of people were able to scale up their accounts, which is great. Okay, they give a lot of good statistics in this, but you need to focus on basically these two metrics right here. The pass rate is 19% for phase 1, okay? And then only 42% of people that pass phase 1 pass phase 2, which again makes sense, as obviously people that pass phase 1 have some skill, and phase 2, obviously people still blow it, but they are profitable traders, okay, at the end of the day. So basically 19% times by 42%, okay, 7.98% of traders make it to the funded stage where they've got a funded account with my Forex funds. Now, at that stage, I would argue it is the most difficult stage. Why? Because you've now got this funded account, and that's where psychologically people start to trip up. They either get really greedy and try to go for huge withdrawals and huge profits and end up blowing or violating rules, or they get scared and eventually just blow up the account due to not being able to make the correct decisions due to a heightened mentality of fear. Now, they know this, prop firms know this, and they take advantage of it. So let's be generous and say that at this point, 7.98% of traders multiplied by 20% who make it to the phase of withdrawing. Okay, these are people that actually make money and get their fee back. Okay, it is 1.59%. Okay, 1.59% of traders make money with my Forex funds. So in February 2023, let's say 1.6% of traders were able to withdraw from my Forex funds. And so only 1.6% of people who paid the fee for evaluations were able to withdraw. And this is obviously how these companies maintain their profitability and continue to make money. And like I say, at the end of the day, guys, it's not a bad thing for us as traders. It means that the profitable traders of us will be paid at the end of the month. And this allows these companies to be reliable in their payouts. Now, it is unfortunate that there are a lot of people that don't end up making money, but that is the reality of the Forex industry. There just aren't enough people that are profitable and have the mentality to be able to perform and be profitable in this industry. So are there companies that operate in an A-book manner where when the trader makes money, they make money as well? They are not betting against the trader to fail the evaluation. They are not betting against the trader to not make withdrawals, okay? So one of the companies that I managed to find is a company called Bespoke Funding, okay? Now, Bespoke Funding is a company in the UK, a prop firm that works in an A-book manner. I actually had a meeting with the CEO and the COO of Bespoke Funding, and I spoke to them in depth. Now, I go through these evaluations and prop firm accounts heavily before putting them on my channel. And I will tell you that Bespoke Funding meets all of my criteria for what I'm looking for in a prop firm, not just in terms of looking for a prop firm where they make money, you make money, but in a prop firm in general. The reason I like them a lot, okay, guys, is because there is no time limit. There are no minimum days whatsoever. There are no maximum days. You cannot run out of time with these evaluations. You just stay within their rules, which is 8%, okay, overall max loss on the trader's choice evaluation and 5% max daily loss. Those are the important metrics, okay, guys? You get 80% profit split, which is great, okay? So the added pressure of the time limit is gone, which most prop firms have. Again, why? They want you to fail. So what I discovered with Bespoke Funding is they want you to be successful. They want you to pass and they want you to make profit, okay? Because when they make profit, okay, the company also makes profit. So it is important to note that this no time limit rule is another thing that shows to me that they are wanting you to take your time, show them that you're profitable so that they can make money in future. They don't want you to be under pressure. They know that making 8% in a month is difficult, okay? And you won't make 8% every month. I don't make 8% every month. And so you are able to take your time with these evaluations. Now, in my meeting with the CEO and the COO, I went over their model in depth. And what I discovered is that once you pass this evaluation and you've done phase 1 and phase 2, you are then given the account, and the account is linked to their actual main accounts. And this means that if you make profit, they are paying you profits, okay, from their profits that they have made. They are giving you 80% of what they have made. They're not giving you 80% of the fees of other people. And this is what I like about prop firms that operate in this manner. It's a more ethical way to trade with prop firms, okay? Now, I'm not knocking other prop firms for not having it. I'm just saying, given the option, this seems like something that's a lot more ethical and something that just makes more sense to work with, okay? You want to work with people that are wanting you to succeed, not people that are betting against you. It's just common sense, all right? Now, when it comes to the big things, which is, again, the no time limit, it's another rule that gives you the chance to succeed, and it doesn't try to put a hurdle in your way in terms of not making a past evaluation so that they can make profit off of you. So at the end of the day, guys, it's good to have the option of working with these kinds of companies. Now, with bespoke funding, I managed to negotiate a deal for you guys. If you go into the description below, there is a link there for 7.5% off on these evaluation prices. You can get a 100K account for under $500, which is basically the same as my Forex funds. And you're able to basically make 8% target in no time limits. So no time limits, and that's the main big deal with this prop firm. They're not trying to stop you from passing. They want you to take your time and pass. Okay, so yeah, guys, that is the good, the bad, and the ugly of prop firms. These are your options in terms of trading. You can either go with an A book example like bespoke funding that makes money when you make money in your trading, or you can go for the traditional route, which is most prop firms that profit when you end up losing the account and losing money on your evaluation. Either way, you can make money, but given the option, I'd probably go for somebody who's a book like bespoke funding. So thank you guys so much for watching and all of your support. I will see you in the next video.